What is a mutual fund? Mutual fund is basically a trust that collects money from various retail and individual investors like you and me, and then the money collected is invested by the asset management company in various securities such as equity shares, bonds, and debentures of companies depending on the type of mutual fund. For example, if it is an equity mutual fund, then the money collected will be invested in the equity shares of the company. Similarly, in equity fund, there are different types of equity mutual funds like large cap equity fund, mid cap and small cap equity funds. If it is a debt mutual fund, then the money will be invested in debt securities such as bonds, debentures and other government related securities. Or if it is a hybrid mutual fund of equity shares and debt, then 50% will be invested in equity shares and the balance 50% will be invested in debt securities like debentures and bonds. The price of the mutual fund is known as the NAV, net asset value, and the quantity is measured in terms of number of units. Say if you invest 10,000 rupees in the mutual fund and the NAV per unit of the mutual fund is 10 rupees, then you will get 1000 units of that mutual fund. And the mutual fund calculates the NAV on a daily basis. So how is the NAV calculated? NAV, that is net asset value per unit, is equal to the market value of all the assets of the mutual fund minus the liabilities of the mutual fund will give you the net assets, and divided by the total number of units will give you the NAV per unit of the mutual fund. For example, in case of an equity mutual fund, the mutual fund will calculate the market value of all the shares of the company in which it has invested as on the closing date, plus whatever cash in hand it has or cash in bank, plus any other amount receivable, minus the liabilities of the mutual fund will give you the net asset value of the mutual fund. Divided by the total number of units, you will get the NAV per unit of the mutual fund, which is the price of the mutual fund. So from this, what are the advantages of mutual fund? Let us see that. Mutual fund gives you diversification and flexibility of investing in small amounts. For example, you have just 10,000 rupees, but you want to invest in all the blue chip large cap companies like Infosys, TCS, Reliance. Then with 10,000 rupees, you may not be able to buy shares of all those companies. But the same 10,000 rupees, if you invest in a mutual fund will be able to buy the shares of all the blue chip and large cap companies. Second advantage is that you get professional management. Supposing that you don't have time to track your investments or you don't have much knowledge about the stock market, then you can invest in mutual fund because there is a fund manager who has a lot of knowledge and experience in handling your money. So this will give you a lot of advantage of professional management. Third thing is that you also get tax benefits when you invest in a mutual fund like equity linked saving schemes, ELSS. So tax benefits also one of the good advantages of investing in the mutual fund. So because of all these things, the risk factor in the mutual funds is quite low. Also, you can check out the description wherein I have given links to the website from where you can find out different mutual funds which are operating in India and you can choose which fund you want to invest in. What are the disadvantages of the mutual fund? The disadvantages can be like, say, in case of equity linked saving schemes, ELSS, it has a lock-in period of 3 years, and some other mutual funds may also have some lock-in period depending on what the type of mutual fund it is. And also the fund manager's salary who is managing your fund, that has to be borne by the investors like you and me. So overall, these are the advantages and disadvantages, and this is how the mutual fund works. I hope you understood now what is a mutual fund, what is NAV and various other factors related to mutual fund. Thank you.